Hey traders, good weekend to you. I got something that I wanted to share with you today that was a huge epiphany for me in changing my paradigm, my outlook, and it's affected our trading in a very positive way. And I wanted to share that with you as well. It has to do with asking you the question, have you ever considered or have you ever hired a trading performance coach? You know, one of the things that we talk about a ton in our live trading room is Stoic equanimity, having that emotional fortitude to not get emotionally whipsawed when trades go against you. And over the last 4 years, I have worked with and hired a trading performance coach that doesn't really focus on teaching you strategies or ways to trade, but the concepts of managing that stoic equanimity. And I've been in the process lately of collating all of the information that she has taught me over that time frame and putting it into a more condensed, concise little PDF booklet for our members of our trading room. And I want to share a Google link to you today in this video. I'll put it in the description box of the outline of the book, and even without having the book in your own hands right now because it's not finished, I think the outline will be plenty of good information for you to hopefully help you get started on that journey yourself. But a big part of what they think or what they focus on is helping you to think outside of your box. And I had an experience over the last little bit in my personal life that I didn't think had anything necessarily to do with trading or finances, but it certainly did. And actually talking with her about this situation is something that sort of changed my paradigm, and it's really flowed over into our trading room. And it is thinking outside the box. It's thinking differently than we normally think. And so a trading performance coach, there's some things that they focus on that can really help you as a trader. And again, it's as a trader, we get into ruts, and there's a mental rut that we can get into as well. So not thinking outside the box, it hurts us in a lot of ways. Number one is missed opportunities. So traders strive for a playbook of consistency that they can wake up every day, every week, knowing that they know what they're going to go trade. And that's a huge part, that consistency to building long-term success. But it can also create missed opportunities if you are not thinking outside the box and you're not looking for other venues or opportunities out there. So I run a scan once a week, usually on a Sunday evening, for unusual activity in stocks, just things that, you know, maybe I have not been aware of and that I can add into our trading regime for the week. But you'll have missed opportunities if you don't exercise that thinking outside of the box mentality. Limited risk management. I like this. It says that innovative thinking often leads to better risk management strategies. Traders who only follow established norms don't adequately anticipate or mitigate risks. Probably the most prudent trade in the world right now to put on is a very, very cheap, very, very inexpensive back ratio credit spread trade that could make you multi-millions of dollars if the market were to crash right now. They're extremely cheap insurance. They're very easy to put on, and they really, if they don't work, they don't affect your overall results hardly at all because they're so darn cheap right now with IV being so low. But most people would, bristle at the idea that they should be focusing on bearish trades right now because, of course, the market's done nothing but go up and up and up and up. So, again, it can help you focus on risk management if you sort of think outside of the box. Inflexibility. If you have a rigid adherence to conventional trading methods, then when the markets change, you're probably going to be left behind. We had a few years ago where we had a bear market, but the previous year was bullish. And a lot of people made a lot of money selling puts on tech stocks. Well, the bull market goes away, bear market comes. I'm talking to people 3-4 months into this bear market that are still selling puts on tech stocks, which have now just obviously gone from the best trade in the world to the worst trade in the world. And they're just befuddled as to why they're not making money. They weren't able to have the flexibility to understand that they needed to change up their strategy. Competitive disadvantage. It's really hard to beat the masses if you're part of the masses. If you always do what you've always done, you'll always have what you have right now. If you do what everyone else does, you'll have what everyone else has. So the ability to think outside the box can help you find opportunities that the masses are not seeing. And then the one that was the most important for me was that emotional decision making, having that stoic equanimity. So I've really enjoyed working with a trading performance coach, and I have the ability to check in with her once a month. And I did that a few months ago about a personal issue in my life with regards to putting a new roof on my house. And I want to share how that sort of flowed over into our trading room today. So there are 3 key areas that a trading coach can help you with. And I love the trading coach that I've worked with over the last 4 years. If you want to touch base with me privately, I can give you her contact information, and I think it would be worthwhile for most people to do. But as I've said, I am in the process right now of collating all of the things that I've learned from her over the last 4 years into a little PDF ebook that I'm going to get out to our trading members, and I think that can be beneficial for you. I will again put a Google link in the description box to the Google Doc that is the overview of the book and the topics that are in there. And I think if you focus on those topics, it'll help you be a better trader. But it helps you focus on mindsets, your structures and frameworks of how you trade, and then a coaching and support mechanism to have the ability to bounce ideas off of people. And that's where this really was a big change for me, and it led to a big change in our trading with our 0 DTEs this past week. So I want to kind of give you an overview of this experience that I went through. And you'll say, well, how does replacing a roof on your house have anything to do with trading? So bear with me here. We've needed to replace the roof on our house for 3 years, and we've got a lot of roof to replace. I have a fairly large house with a 4-car attached garage, and then we've got a couple of casitas or off buildings in the backyard. We've got a big shop, and then that's where my office is. That's where I'm filming this right now, is in my office in the backyard. So this is going to be expensive. So we put it off, and finally, push came to shove. We knew we needed to do it. And it just made sense at that time to look once again at getting solar on the roof. Just made sense to do that. Now, I've been accused in the past of and being an anti-environmentalist, of hating EVs, of hating electric cars, of bashing solar. That's absolutely not the case. I hope we're all environmentalists. I hope we would all want the environment to be in the best shape that we possibly can. But for me, it has always needed to make sense financially as well. And so I've never been a big proponent of electric cars. I look at a Lucid, I look at a Rivian, I look at a Tesla, and I think they are marvels of technology. They're amazing. If you've ever ridden one, the immediate torque of an electric car is unmatched. But to me, they're toys. They're very expensive toys. They're not functional vehicles. I can't get any value out of a vehicle that has a 180-mile range. If I want to go drive from Utah to California to see my granddaughter, I'm not going to take a car that can go 180 miles before I need to find some place to charge it. I'm just not going to do that. The other aspect of EV cars that I think people don't really think about, EV cars are not free to fill up. It costs you money to fill up the tank of an EV car. It may be cheaper than gasoline, but electricity is not free. So I marvel at the technology of EV cars, but to me, they're just cool toys. Also, I don't understand why you would purposely overpay for a car where you could get the equivalent gas vehicle for less money that is actually a functioning vehicle. So I marvel at their technology, but I don't see that I would ever own an EV car. Solar. I've looked at solar probably 4 times over the last 12, 15 years that we've lived in this house. And, I'm always keen to save money. And so every time that I've looked at solar, And I've run the calculations. To me, it came out to about a 5% return on the money that it would cost me to put those solar panels on. Now, one of the hard and fast rules that I have as an investor is that if I'm going to look at a investment that has risk and reward, right? You can't have reward if you don't have risk. And that reward is 10% per year return or less. I just skip it. Because I've been doing peer-to-peer lending and fractionalized investing since 2005. I call them my savings account. It's where I just dump my little extra pennies at the end of each month, and that's my savings account. I started in 2005 with Prosper.com, went right through the greatest depression of all time. The 2008 financial crash was greater than the crash of 1929. And have continued on with a company called Ground Floor. And if you're not familiar with fractionalized lending, I have averaged for almost 20 years now, year after year after year, 10% return every year after year after year, through the depression of 2008, the financial crisis of 2008, tech bubbles bursting. It doesn't matter. Market downturns. I have averaged 10% a year after year. So this is a side note, but I will throw a link in the description box below. If you are interested in a place that, at least for me, has been an amazing place of stability and a place that I forget my login half the time because you don't have to check it all the time. It's just locking in for me. For me, again, this is my personal experience, 10% a year after year after year. I'll put the link for Ground Floor in there. Check it out. I think it's a great place to save some money on the side outside of the risk of the stock market. But that's my minimum threshold. So, if solar is going to generate 5% of return a year for me, I'm not interested in it. So we were putting the roof on. It was time to look at it again. We looked at it again, and it was the last time that I had looked at solar. I'm trying to remember the numbers here, but it was about $22,000 for solar panels, and it was going to save me about $1,400 a year. So right in that 5% range. Okay. And so, of course, my theory is on solar, I want to spend as little as possible. If I'm spending money out of the pocket, I want to spend as little as possible. Got a couple of bids. They came out, they looked at my house. And again, my electric bill, I think, is high. My average electric bill is $385 a month. That might be high or low to you. I don't know where you live in the country or the world, but I know for my neighborhood, I get statements all the time from Rocky Mountain Power saying you're spending about twice as much on your electric bill as your neighbors are. But we have a fairly large house. We have a 4-car attached garage. We have again, we've got a separate shop and a separate office, and I've got a gazebo that's all lit up, and then the house is lit up like a Christmas tree every night. So, and then we got a hot tub. So it all adds up, and we spend about $385 a month on our solar. So I got a bid on solar. The best bid that I found was for $20,000. So it used to be $22,000, now it's $20,000. Solar pricing has come down a little bit. Efficiency has gotten a little bit better. But again, it was going to save me on my electric bill about $85 a month. It came out to about 5% return. Once again, I'm like, okay, this just doesn't make any sense. And the salesman for the solar company said, can I entice you into thinking outside the box? And I said, okay, this is interesting, because I just had this conversation with my performance coach. And I said, where are you going with this? He said, well, I'd like you to entertain the idea of spending almost 3 times as much. And I said, well, this is going to be an interesting sales pitch. Let's hear what you've got to say. So he said, here's my approach that I would recommend. He said, you've got a ton of coverage. We have a southern facing house. We have a lot of areas for panels. He said, we could really ramp this up. And if you would spend $56,000 on solar, and you could do this with a loan, and the loan is going to have a payment of $550. So we're going to spend $56K on solar. And that's going to equal a payment of $550 a month. Okay. And already I'm like, you're losing me. This does not sound like an improvement of a situation. He says, listen to me. You're going to spend $56,000. We're going to cover your roof with these solar panels. It is going to take up about 105% of your usage. Now that fluctuates. In the wintertime, you're going to get a little bit less with the sun, and in the summer you get a whole lot more. But on average, it's going to generate 105% of your daily average usage. So you're actually going to be a power generating station. You're going to generate more power than you actually are using. And a couple things that he said on that. He said, now, of course, this is going to come with about a $16,800 tax credit back to you. Okay, so I'm going to use a loan to do this. I'm not going to put any money out of my pocket, but I'm going to get $16,800 in cash. It's not a tax deferral. It is a tax credit. It's dollar for dollar. So I'm going to get $16,800 back. $16,800 back from the government on that. And he said, he's talking about places, he says, there's surely some place that you could invest that. Well, yeah, I can. At 10% interest in ground floor, that's going to be about $1,680 a year in income that would generate. That would help to offset things a little bit. And then I started thinking a little bit more outside the box on my own. And I said, my wife loves Teslas. Again, I don't think they're, really functioning vehicles yet, but she loves them. She's got a BMW X6 that's paid for that we could trade pretty much straight across for a used Tesla S, which is the car that she likes. And she spends about $220 a month on gas. Okay. And she would save that. Now, remember earlier I just said, hey, it's not free to fill up an electric car. You still have to pay for electricity. Well, if I'm getting that electricity from the sun now, that is actually free. Now, a couple of things as to why this is so expensive, as to why this is $56K. I have to buy, in addition to this Tesla, I have to buy 2 more Teslas. And they're Tesla Powerwalls because, number one, obviously solar only works when the sun is hitting it. So you don't get solar power generating at nighttime. And if you're generating more than you're actually consuming, you have to have some place to store that. So we had to get 2 Tesla Powerwalls along with that. That's why it was $56K. That's why it was so expensive. But we're going to now switch over to a Tesla. It's going to save about $220 in gas. In addition to that, I've got this 5% overage right here. This 5% overage. It should generate somewhere around $19 a month for me. Somewhere in that area of income as I sell that power back to the power company. So I've got a little bit of income coming in there. And then the loan for the solar panels is 7.75%. And I would imagine as the Fed cuts rates a few more times over the next couple of years that I can probably lower that. Now, this is an estimate, but I'm assuming that I'm going to be able to lower that bill by either putting it on a home equity loan. I don't want to pay it out of pocket because this is a self-supporting investment. But I could transfer that loan to a home equity loan, maybe save a couple percent on that as well. And that should save me loan interest savings. Should save me somewhere, I would think, around $93. Sorry, that's horrible writing. 92, 93 bucks, something like that a month of savings on the loan cost. Okay, so that puts me pretty much right to where I'm going to max out my savings on this deal. There's approximately in here $472 of savings that I'm bringing in. That means that basically, if you add that $140 in here, that $140 a month of savings from my tax credit right there, adding in, it's about $472 in savings that I am bringing in. That would leave me roughly with a $78 a month bill. In other words, I would be saving approximately $300 a month, maybe a little bit more, but let's be conservative, say about $300 a month is what I'm saving. Now, $300 a month invested at 10% return for 20 years, is very close to $219,000. And I think obviously I can probably do better than 10%. That's my minimum sort of quote unquote savings account that I'm looking at. I think that by thinking outside of the box, I've probably given myself the opportunity to put maybe another $250,000 in my pocket over the next 20 years by spending more on something that I would never want. So now we're getting solar. I've never been a big proponent of solar. Now we're going to technically own 3 Teslas if you count the 2 Tesla Powerwalls. I never thought I would own an EV car, but it is an example of thinking outside of the box. And the reason that this was just such an epiphany for me lately was we've done a lot of this past week with our 0 DTE trade setups. We have really thought outside the box. We have built some initial structures and setups with our 0 DTEs that maybe didn't make a lot of sense to a lot of people because they had very low probabilities of success, but they also had very low amounts of risk. And it's interesting, this week we endeavor to do 3 0 DTE trades every day. We do a 0 DTE on the SPX, we do one on the NDX, and we do one on event contracts. So we're doing 3 trades. We endeavor to do 3 trades every day. So we're trying to do 15 a week. Sometimes we get a little bit more, sometimes we get a little bit less, but we did get exactly 15 0 DTEs in this past week. Every single one of them made money. And what's interesting about that is that we didn't become better traders, and we didn't get lucky. If you look at the projection or the trajectory of those trades over this past week, those trades were challenged and dipped into the red probably as much percentage-wise as any other week. But because of the way that they were structured, we either said, A, I don't care because the amount of risk is so minimal that it's easy to fix, or B, it will fix itself. It will right itself based on the way that we have structured it. And it allowed us to have that stoic equanimity. It allowed us to sit in the trades for a little longer. So I don't know if those same setups are going to be appropriate for this coming week. Again, everything ebbs and flows, and you got to be flexible in your thinking. You got to think outside the box. You don't want to get into a rut in what you're doing. But it certainly was a great example for us this week in thinking outside of the box. So hopefully those little tidbits help you. Again, I'll stick a link for Ground Floor. If you aren't earning 10% on your savings, I'll shoot you a link. You can go check those guys out. I love them. And I'll shoot you a link to my Google Doc on the outline for the book on performance coaching, trading performance coaching, and what areas they focus on. And maybe you can do sort of some self-help with yourself there as well. If you want to be a part of our trading program, we'd love to have you come check it out. You can come check it out for free, and we have a 100% satisfaction guaranteed. In fact, if you go through the first months of training, you go through your 4 hours of training, you go through the plan that I help you formulate one-on-one on a Zoom meeting, you do your daily check-ins, and you don't find it to be the best value, highest level trading room in the community out there today, I'll give you twice your first month's subscription back. So very little reason to not come check out what we do and join us. You can go to try0dtforfree.com. If you want to set up a trial, you can come trade with us for free for a week. And as we have that one-on-one Zoom, we'll build out a plan of action for you that I think you'll absolutely love. So love to have you. If you want to stay in touch with me, you can do so at scottstewartcontacts.com. And once again, guys, appreciate all of you. Appreciate the trading community that we're building here online. Hope you guys have a really great trading week coming up. Take care, and we'll talk to you soon.